So there's three major ingredients to a successful options trade. First one being thesis, the second one being trade structure, and the third being risk management, managing risk. Now, the first one, thesis, is how do you come to a thesis? Well, it all starts with an edge or a system on getting to that. And then the structure of the trade and then the risk management of that. So one of the ways that some people follow or get to a thesis is following unusual option activity or order flow. Now, I follow what I refer to as hot money. That's my way of finding activity where money's going in real time, short term money, looking for a big directional movement in the underlying. Now, I want to walk you through one specific example of walking through these three steps using order flow and why it can be tricky just following order flow or just listening to people talk about unusual option activity. So, what we're going to take a look here is at a headline that came out yesterday. So the headline is discussing here that China was poised to be much tougher than it anticipated or what was discussed previously, that the country is going to get a lot more harsher or a lot more strict on its $120 billion private tutoring industry. Now, one of the companies that this affects is specifically this one right here, TAL Education. This one was one that was really the one that got hammered today, was down 14%. The other one is EDU, but this is the one that we saw, or I saw, a lot of the activity that I'm going to share with you in a second here, and one that was all the way, or that was the weakest. Now, we do see that this has been pretty weak since back in May, even previously before then. So this has, I didn't look too far back in the previous months of, when this was originally announced. But if we look to the left of this chart here, this was a $90 stock that's now $20 here. Now, you may have heard people talk about, Josh, don't catch a falling knife. What are we going to do here? So it's a really good example. And this is the reason why just following order flow can be tricky and also confusing to some people here. So right here, we have $20.51. The one thing in always coming to a thesis is always understanding the structure or the underlying and why it's different. Every underlying is different. An Apple is going to be different than a TAL or an Intel, or you treat each one separately because there's a different makeup for each. So when we look at TAL here, the key thing that you don't see on here is that this stock is what's known as an SSR, short sale restricted. This means that someone can't short this stock unless the tick previously is higher than the previous. So if this was 2051 that it closed at, I am not able to short this until it hits $20.52, and then I can short and get short at that point. So it has to be an uptick before another downtick. So no consecutive downticks, which reduces the velocity of the move lower. Now, that doesn't mean that this doesn't go lower, but that just reduces the amount or the compounding of the velocity to the downside. So it's going to be key when we look at the structure of this option market here. So the thing that got me interested is that the overall volume on this was 400%. The ones that stick out here are the July and also the August here. Now, a lot of this is some of this is two-sided trading, but this was buying. And I'm not going to walk you through exactly all the time and sales here, but the majority of them were buying. Majority traded on the offer. We'll have to see what sticks. The assumption is that some of this was and will add to the open interest tomorrow. Now, the key thing to remember is that this is a SSR. Now, some people would say, well, I'm gonna follow this activity. I'm going to get in with this activity. Well, if we just created a thesis around that first thing of like understanding that this is a short sale restricted stock, that is going to reduce the velocity of how fast the movement to the downside is going to happen. So that's a key thing to remember. That's going to help you create a trade structure if you are still short. That's why thesis is important, understanding it, and then the trade structure here. So the key thing to point out is understanding the option market. There's known as a skew. Well, the interesting thing on the equity market is that typically the skew on equities is to the downside, meaning that the skew, that there's more fear to the downside than there is to the upside. Well, in this one specifically, if we look at the 40 delta option on the 20 put here, that's a 40 delta. If we look at the equivalent on this, it's all the way, that 40 delta is at $25. So the stock traded or closed at $20.62. This is nearly $4.50 out of the money compared to its equivalent, which is 60 cents out of the money. What that indicates is that the skew is onto the call side, and there's more fear of prices going higher because there's not an uptick rule on this one. So there's more fear that prices spike higher than they do go lower. This is going to create a lot of nuances for those that are trading options and understanding how to do it. Now, this is why it's important to create a trade structure or understanding the product, the underlying, and how to build around that. So if you're still short or you want to follow the activity, there's nothing wrong with that. You could still say you're short. But I would have to say to myself, if I was looking at this and looking for a trade, I'd say, okay, maybe this is going to sell off over the long term. There's a lot of unknowns still. I mean, it was an article. Who knows what's going to happen here? But let's just say, for the sake of being, we're going to get short this. I want to short this because I still think it's going to go weak or still go lower here. One of the ways that I would look at this is I would go out a little bit further here. I would look at something. I would wait for an uptick first. I would wait for this to get a little bit of relief. Shorting where prices are right now is known as getting short in the hole, meaning it's already. So you want a little bit, kind of tick up a little bit and then kind of get short here. But if I had to, this is what I would be doing. This is what I would look for because in the next 64 days, it's pricing in a $9 move higher or lower. I mean, $9, I mean, we might as well just push the 10. $10, we could see shares at $10 on this in the next 64 days, or we could see shares at $30. So that's an interesting aspect. But if we're looking for it to move lower, what I would look to do and how I would structure a trade on this one would be to buy the 2250 and to sell the 17.5. And the reason why is because I want a little bit of intrinsic value to offset that, the time that's going to take away at that. So also on this one, the volatility on this one is 122, and I'd be selling a 127. So it's not ideal because what's going to happen is even though that prices, if they do go lower, that volatility is going to tick up higher, but it's not going to explode to the downside because it's a SSR, it's a short sale restricted. So this is why it's important to keep in mind. This is the amount of time that traders, successful traders, professional traders take to organize their thoughts or put on positions. Now, again, the last part of that is position sizing. Hey, I found this, I'll put this on, I manage it, now it's my risk. So not ideally why you just want to follow blindly buying calls or buying puts following unusual option activity, because unusual option activity is very broad. This is unusual option activity, but that doesn't really help you understand how to become successful. So this is the 3 steps that you would take from thesis, trade structure, to managing risk on a position here of finding an opportunity using order flow, unusual option activity, and then filtering it to figure out what you want to do. And you could get to the end of it saying, hey, the risk part of this isn't really worth it. I'm not really that concerned with it. I'll just move on to the next opportunity. That's okay as well. But this is the process. So hopefully you learned a few different things here. Leave a comment. Let me know what you think. I'll see you in the next one.